Joining us now is Karl Schilling, founder of the Advocacy Network and the Middle Class Millionaire Minute. Karl, welcome back to the program.
Yes, great to be with you, Don. Thanks so much.
Now, you're a big proponent of betting on yourself, and you're saying this week that the best way to bet on yourself is using life insurance. Explain that, please.
Yeah, it's a commonly misunderstood product, Don. There's so many agents who, over the years, have I think abused it in a sense, and the industry as well has tried to put sales above using things properly, right? So, to give you an example, back in the 80s, there's something called bank owned life insurance, and that was called BOLI. And the banks learned very rapidly that cash value life insurance was a great ally, it was a great place to have their money. So, all of their employees and their executive employees, they put life insurance on. Today, there's over $150 billion from banks in life insurance and the life insurance companies. So we try to help people understand how to use life insurance properly so they can create their own bank, Don.
What's the secret to it?
Well, it's the mix of the blend because if an agent uses too much death benefit, they get more commission, but a person builds cash value slower. If an agent builds it properly, then they're going to earn less, but at the same time, the cash value is going to grow much faster. So there is a formula to use to build it properly, to use the least amount of death benefit possible in order to maximize the cash value of the policy. And this creates tax-free liquidity, tax-free income, and also generational wealth, which no one seems to pay attention to.
How do you know when you're getting the right information from your agent, Karl?
Well, I think that people should ask their agent. Well, first, I can tell you right away when they show you a proposal, if there's less than 50% of what you put in that annual premium, if there's less than 50% of that in the cash value in the first year, the formula hasn't been done properly. So that's a question to ask when they show you that. So if you see a very small cash value in year one, then you realize that you basically are paying premium for death benefit and you have very little dividend accumulation going on in the early years.
Are there particular companies that you favor over another?
Well, for me, I use Lafayette Life. Lafayette Life's a 115-year-old company, been around a long time, got a very strong dividend scale, like 5.3% dividend scale. But there's other carriers that are very, very good. Most of your mutual carriers, your Mass Mutuals, your New York Life, Northwestern Mutual. Most of those are captive companies where agents have to work only for that company. So, but I've compared Lafayette Life to Mass Mutual, Northwestern, and New York Life, and it's very, very, very competitive.
Well, what percentage of an investor portfolio should be in life insurance, Karl?
Well, I think there's several reasons to use life insurance, Don. So it really depends on whether a person has a large estate. Then, for estate planning purposes, there's nothing like life insurance because that's going to be tax free, right? That's going to be tax free for the family to liquidate that estate. Business owners have a lot of ways that they can use the life insurance, but we try to get people, Don, to understand that they got to increase their income and put away about $2,000 a month, about $24,000 a year into their life insurance plan. And that'll give them tax-free income if they use it for retirement, but also for opportunities. It's tax-free. It's totally tax-free income and tax-free liquidity. And lastly, I'll give an example. I had a client a month ago, just retire. That client's been with me for 35, 36 years. And I haven't spoke to him in about 11 or 12. And he just retired and he's getting $77,000 a year tax-free from his life insurance. So that's beyond his Social Security and everything else, $77,000 a year tax-free. So he's a very happy camper, Don.
And as you said in this program before, the government is not your partner.
Not your friend at all. And that's why we look at everything as a whole in that middle class millionaire plan. We look at the fact if you have qualified money, in either IRAs, 401ks, or any kind of qualified money. We look for finding ways to take you out of that. And then we also look for ways for you to be able to fund your life insurance and create a bank properly.
Karl Schilling, the Advocacy Network. Karl, always a pleasure. Your sound advice is much appreciated. Thanks so much.
Thank you so much, Don. Have a great day.